Here's a summary of Duolingo's Q1 2026 earnings call, designed for easy reading aloud. Introduction. Good evening, everyone. Duolingo's Q1 2026 earnings call focused on execution and strategic investments for long-term growth. The company highlighted significant product advancements, particularly in AI-driven learning features and content expansion, while reiterating its financial outlook for the year. Key financial metrics and forecasts. Q1 performance. Duolingo achieved double-digit growth in both bookings and revenue. Gross margin expanded in Q1 and is expected to be approximately 71% in Q2, trending down to roughly 69% by the end of the year as AI feature adoption increases. Adjusted EBITDA delivered $83 million in Q1, representing about 29% of revenue. Q2 is projected at roughly 24%, with Q3 flat to slightly down, and Q4 approaching 27%. Full year 2026 outlook. Bookings growth expected to be 10% to 12%. Revenue growth projected at 15% to 18%. Adjusted EBITDA margin targeted at approximately 25%. Point estimates. Bookings growth of 10.5%, revenue growth of 16.1%, and an adjusted EBITDA margin of 25.7%. Future guidance notes. Q2 bookings growth of about 6% reflects a tough prior year comp due to the energy feature rollout and strong ad performance. Revenue growth is expected to step down in Q3 before stabilizing in Q4. Bookings growth is anticipated to accelerate in the second half of the year. Q2 gross margin is 71%, declining to 69% by year-end. Q2 adjusted EBITDA margin is 24%, with Q4 nearing 27%. Balance sheet. Duolingo enters Q2 with over $1 billion in cash and no debt, expecting to generate over $350 million in free cash flow this year. The company plans to continue its share buyback program. CEO's remarks. Luis von Luis emphasized that Q1 was about execution, prioritizing, teaching better, and strategically shifting to grow users. Product innovations. Speaking practice enhanced significantly with spoken tokens, speaking adventures, real-world conversational scenarios, and flashcards requiring users to speak aloud. Video call. Average words spoken per user in this feature has more than doubled in the past year. Content expansion. Courses now reach B2, professional proficiency, on the CFR scale for the 9 most learned languages. In Q1 alone, 20.5 thousand course units were published, a substantial increase from previous years, driven by AI. AI integration. AI is fundamentally changing what's possible, making the product better than ever. User growth. Daily active users, DAUs, grew 21% year-over-year, in line with expectations. Growth is seen across all regions, with Asia being the fastest growing. Free tier revitalization. More features are now available to free users, aiming to increase word of mouth and retention. Mobile gaming inspiration. Duolingo is incorporating elements like avatar costumes and collectible reward cards, drawing inspiration from mobile games to enhance engagement and fun. Monetization. Longer free trials, particularly 1-month trials, are proving effective in increasing bookings without negatively impacting DAUs. Fun factor. The core philosophy remains to make learning fun and engaging to maintain user motivation, with AI-powered voice features enhancing, not detracting from, this. CFO's remarks. Gillian Munson. Gillian highlighted Q1 as a solid quarter with strong financial performance and outlined the strategic investment approach for 2026. Strategic year. 2026 is a key strategic investment year to build a larger, more durable long-term business. Guidance philosophy. The company is managing the business towards targets shared previously, with a focus on long-term growth over short-term optimization. AI cost management. AI adoption is increasing gross margin pressure, leading to the projected decline to 69% by year-end. However, per-unit AI costs have decreased, and optimizations are ongoing. Cash position and capital allocation. Strong cash reserves and free cash flow provide flexibility for investments and shareholder returns, including the buyback program. Bookings. Reacceleration. The back half guidance assumes typical seasonality, with investments made throughout the year to support sustained growth. Significant risk factors, implied, competition, the highly competitive app market, and the need to continuously innovate to retain users. AI costs and optimization. While AI offers benefits, managing the associated costs and achieving efficiency gains will be crucial for margin management. Monetization balance. Finding the right balance between user growth and monetization without creating friction that deters users or hinders engagement. Macroeconomic conditions. General economic factors that could impact consumer spending on subscriptions. Execution risk. The ability to successfully implement and scale new product features and marketing strategies. Key highlights: strong DU growth, 21% year-over-year, demonstrating successful user acquisition strategies. AI-driven product advancements, significant improvements in speaking practice, content creation speed, and personalization. Content milestone. Courses now available up to B2 proficiency for major languages. Financial discipline, double-digit revenue and bookings growth, solid EBITDA margins, and a strong cash position. Strategic clarity. A clear focus on long-term investment and user experience, supported by financial guidance. Key lowlights: gross margin decline. Projected decrease in gross margin to 69% by year-end due to increased AI feature adoption. Tough Q2 bookings comp. Expected slowdown in bookings growth due to a strong prior year quarter. Slower U.S. growth. While growing, U.S. DAU growth is lagging behind some international markets, though efforts are underway to address this. Most important statements. Luis Vaughan on CO. Q1 was about execution. We said we were going to prioritize teaching better and changes in growing users, and that is exactly what we did. DAUs grew 21% year-over-year, right in line with what we expected as we make this strategic shift. And AI has fundamentally changed what is possible for us, and I believe we are just scratching the surface. The product is better than it has ever been, and I could not be more excited about what is ahead. Jillian Munson, CFO. Q1 was a solid quarter. We achieved double-digit growth in both bookings and revenue, expanded gross margin, and delivered adjusted EBITDA of $83 million, which is about 29% of our revenue. And the overall message is that 2026 is a key strategic investment year for us, and it is playing out as we expected so far, as demonstrated by the point estimates for our financials that we have shared. This concludes the summary of Duolingo's Q1 2026 earnings call.